positive close for the S&P 500 and the Nasdaq. The Dow's got a little bit of work to do, but it's a different picture. The deadline is looming long, but
The bell's bringing an end to the trading day at the NYSE Voya Financial ringing the bell, and at the Nasdaq, SS&C Technologies doing the honors. Welcome to Closing Bell Overtime, live from Studio B at the Nasdaq market site. I'm Mike Santoli. Melissa Lee is off today. Well, stocks closing well off their worst levels of the session. The Dow was down 450 points at the low of the day. The S&P 500 and the Nasdaq turning slightly positive in the final minute of trading. Coming up, we'll get the latest news on negotiations with Iran, which are helping stocks recover, plus the impact on oil and all of the big market movers, including Apple. Our team is all over every side of it. Also on our radar at the close are chip stocks, a good safe haven to hide in while politics cause stock volatility. Dan Niles joins us to talk about that. Earnings season is about to get started. We'll hear from Levi's in just a few moments, and Delta reports tomorrow morning. We'll get a preview of that one. But let's begin with Megan Pasella with the latest from the White House. Megan.
Mike, some really fascinating pieces just in the last hour or so on this, starting with a proposal in the last half hour or so from the Pakistani Prime Minister suggesting that everything essentially be put on pause for another 2 weeks as a diplomatic solution is worked out. There are three parts to this from the Pakistani Prime Minister. President Trump would extend his deadline from 8 p.m. tonight for another 2 weeks. Iran would reopen the Strait of Hormuz for a corresponding 2 weeks. And there was a ceasefire everywhere for another 2 weeks. I reached out to the White House about this. The White House press secretary, Caroline Leavitt, told me that the president has been made aware of the proposal and that a response will come. Separately, we also heard that a senior Iranian official told Reuters that Tehran is positively reviewing Pakistan's request for a 2-week ceasefire. Previously, we had heard that the Iranians were not interested in anything that was amounting to a temporary ceasefire. They were pushing only for a permanent solution, now possibly looking at this view positively. So, Mike, this is the most movement that we've seen in hours on this, as we are just about 4 hours now from the president's 8 p.m. deadline. Mike?
Yes, I guess, Iran giving that comment, they are positively reviewing this. I guess that's not necessarily an affirmation that they're game to reopen the strait for 2 weeks. And before all this, obviously, there was a lot of kind of brinksmanship, and there were also additional attacks, right? I mean, we did have some action from the U.S. side on Kharg Island and elsewhere.
That's right. Throughout the day today, overnight last night, the rhetoric was increasing, but so were the actions. A White House official confirmed to me this morning that the U.S. military did target military targets on Kharg Island overnight. It's key, though, that they were military targets, that they weren't broader oil infrastructure targets, no sorts of civilian targets yet. That's what, of course, the president is threatening to do as of now, as of 8 p.m. tonight. He says he'll do that unless they agree to this deal. So for now, though, they are still targeting Kharg Island, but it wasn't for the first time in this war that they had done that. So it was some increase in actions, but for now, kind of keeping things temperate through the afternoon. And now in these final few hours, I think, Mike, it's very likely we get a lot more from this building and from overseas as both sides start to digest and really think about this proposal.
Yeah, well, we'll listen for it. Thank you, Megan. Let's get to today's market action and Christina Parcinellos. Hey, Christina.
Well, markets closed with a risk-off tone as investors really watch those headlines out of the White House. You had Iran, and volumes normalizing, though, after yesterday's really sluggish session. Was actually the slowest day of the year thus far. The Nasdaq finished slightly higher despite an almost 3% drag from Apple, a big weight there, 2% I should say now. Broadcom surged roughly a little bit over 5% after locking in an expanded deal with Google and Anthropic, roughly 3.5 gigawatts of Google AI chips for Anthropic starting in 2027. Also, a supply agreement with Google running through 2031, so long term there. Mizuho sees Broadcom pulling in roughly $42 billion in AI revenue from Anthropic alone just next year, so that's why shares climbed 6%. Intel also climbing over 4% after joining Elon Musk's Terafab project with Tesla, SpaceX, and xAI, targeting 1 terawatt of compute annually for AI and robotics. Though the full scope of Intel's role is still unclear. There's no press release, so we'll see with that. Axon, another name, plunging roughly 10% to a new 52-week low. Its fifth double-digit drop in 6 months with no clear catalyst. This is a maker of drones as well as body cam equipment. Home builders also fell after Seaport downgraded the sector on weak job growth and softening demand within the housing sector. And then you also had health insurers that moved in the opposite direction up. United Health, for example, closing 9% higher, its best day since August after the Trump administration locked in a roughly or almost 2.5% Medicare Advantage payment hike for 2027, Mike.
All right, Christina, thank you. Well, Apple, one of the worst performers in the NASDAQ 100 today. Mackenzie Sigalos looking at the latest potential issue for that company. Matt.
So, Mike, it was conflicting reports on what could be one of Apple's biggest iPhone launches in years that left the stock in limbo today. First, Nikkei Asia cast doubt on Apple's ability to debut its highly anticipated foldable iPhone this September, reporting that the company is running into engineering issues during the test phase, and its suppliers have been told to brace for delays, really throwing into question whether the device can launch this fall alongside the iPhone 18 lineup. But then a few hours later, Bloomberg contradicted that report, saying that the foldable phone is still on track for a September release, even if initial supply could be tight because of the complexity of the new display. That helped the stock come off its worst levels. And Mike, the stakes here are high. This is Apple's first foldable phone, one of its biggest device swings in years, and it's expected to retail for more than $2,000. Crucially, it could also give Apple a fresh premium product at a time when the company is trying to keep momentum going in China and prove that it can still generate real excitement around new hardware. Mike?
Yeah, Mac, it was interesting. Obviously, for much of the day, a lot of stocks were down, but the volume in Apple was actually much heavier than average. And so that does say that there was some reaction to this news or this set of reports that seemed to be weighing on the stock. On the other hand, hard to avoid the fact that Apple up to today had been kind of an outperformer because it does sometimes, behave pretty defensively within the tech sector.
That's a great point, and had been the best performer of the Mag 7, although they all were in the red year to date. And part of that is a lot of optimism around its AI strategy, hopefully coming to bear around its developers conference that's coming up in June. But the iPhone, this foldable iPhone, has been one of these big device swings that people were already baking into potential upside in terms of a new lineup. And remember, foldable iPhones are a very popular product in China, and Apple finally saw this major rebound in Greater China in fiscal Q1 2026, revenue surging 38% year over year. So there's this expectation that they could see even more upside from that going into the fall quarter.
Yeah, exactly. No, there's no doubt that the foldable phone had become a bullish talking point going into the summer, and this idea maybe it could kickstart the upgrade cycle and all the rest. So see how that goes, Mac. Thank you. As stocks rebounding from their lows of the day, oil fell from its highs. Pippa Stevens looking at all that for us. Hi, Pippa.
Hey, Mike. Well, the futures market is not telling the whole story because dated Brent hit $144.42 per barrel today. That is the highest nominal level on record, according to S&P Global Energy. And this is the price based on actual bids, offers, and transactions. And so it's more telling than futures prices. Meantime, Saudi Arabia raising its selling price to record premiums, setting May loadings of its Arab light crude heading to Asia at $19.50 above the benchmark. That's up from $2.50 in April, according to Gulf Oil's Tom Closa. Now, Asian buyers are increasingly looking for Atlantic barrels, which is leading to reshuffled energy flows, with WTI tightening into the global system. Some U.S. Midland cargoes are now going to South Korea via the Panama Canal. That's based on data from Kepler, a route that hasn't been utilized for at least a year. Now, product prices remain extremely elevated, but with the jump in spot crude prices, refiners now have to absorb those higher costs. And so just as the system needs more fuel products, refiners might have to start cutting their runs. Mike?
Yeah, it's such a kind of intricate chain reactions all throughout here, Pippa. And obviously, we're just getting these possibilities of a 2-week ceasefire, and maybe that would come with Iran allowing traffic through the strait again more, in a more complete way over that period of time. And I wonder if we could just game out what a 2-week reopening would be if it were only 2 weeks. It seems like it would just sort of clear some product that was already loaded, but it's not necessarily like it would kickstart production again and get the whole system back in gear.
I think that's exactly right. I think a 2-week pause could definitely get some of the tankers that have been loaded and sitting in the Persian Gulf cleared out, and that will definitely help ease some of the tightness in the global system. But 2 weeks is essentially no time in terms of the global shipping industry. When you just think about how long it takes for a tanker to route around the world, it's going to take far more than 2 weeks to get those tankers back in position. And if you also look at some of the factors that have hampered flows, but and insurance, of course, is one of those. If you have a 2 week pause with no real clarity what happens after that, you're not going to see insurance providers willing to insure these tankers. They're definitely going to take a wait and see approach and a wait for there to be more clarity. And then finally, I would add that once you restart production at some of these fields, it's a gradual ramp up. And so we're not going to restart, think about restarting if it's only for a temporary 2 week period, because then it's even more difficult to then wind it back down with the ultimate goal of re-ramping it up once flows have normalized. And so when it comes to energy markets specifically, 2 weeks could help clear some of the backlog in the Persian Gulf, but not much beyond that, it would seem.
Yeah, it would seem only if those 2 weeks were used to actually create a more lasting resolution would it be, really reassuring to all the markets. Pippa, thank you very much. Levi Strauss earnings just out.
During the quarter. Now, given the strong Q1 beat, Levi also raised its full year guidance, which was a beat on the top line, but a bit light on the bottom. I spoke with CEO Michelle Goss and CFO Harmeet Singh just before the release, and they said tariffs and higher costs are still weighing on EPS. However, it has not factored in the recent tariff rollback into its outlook, which still assumes a 20% rest of world tariff. If the new 10% tariff stays in effect, that could benefit earnings by 35 million or 7 cents per share. The company could also be refunded as much as $80 million. Now, as far as higher gas prices, Goss told me that the company has not seen any pullback on spending. She said they're well balanced across all consumer segments and, quote, feeling really good about the consumer. Mike?
All right. Yeah, market taking it as pretty upbeat, Gabby. Thank you. Well, Levi's CEO will break down those results in an exclusive interview tomorrow at 10:30 a.m. on Squawk on the Street. While stocks did move higher into the close on renewed hopes for a ceasefire, the S&P 500, NASDAQ, and Russell all closing in the green. Small gains, but big bounces from the early morning lows. Joining us now is Vital Knowledge founder Adam Crisafulli and Wells Fargo head of global market strategy Paul Christopher. Guys, welcome. Adam, I think the big question is, the reactions make sense in response to headlines. I think the big debate is over what's already baked in with markets at this price, at this level, up off the lows. We really didn't get even a full flush of a correction before this. So what's your read on the risk reward balance here?
I think if the Pakistani proposal that we saw in the last, half an hour, if that were actually adopted by both sides and genuinely implemented, I think you'd see a pretty powerful rebound rally. I think there's still a lot of anxiety out there in the marketplace about the war continuing and the fallout from the war. We're already going to see a pretty substantial fallout just in the last 5 weeks, even if things ended today. But I think that if you were to actually see that adopted a 2-week ceasefire, 2-week reopening of Hormuz, and then presumably more negotiations, I think you'd see a pretty powerful rally over the coming days. So we'll have to wait and see.
For sure. And that is the rule. All we do here is wait and see and fixate on the same issues. Paul, though, I wonder what your take is in terms of whether another 2 weeks, if that's what we're going to get, is going to create any wear and tear on the underlying economic story, or are we still in that window when, if we have some kind of resolution, the fundamentals can withstand it?
Oh, no, it will absolutely might be a friction for the economy. We look for that in that CPI report later this week, and maybe post a month-on-month gain of 1%, potentially a little bit more than that. Again, that's going to be a friction for the economy. What we don't want to see is oil up at $175, $200 a barrel for any extended period. That's when we start to believe that oil could start to undercut the constructive fundamentals that we see for this year.
And so what would be your recommendation, Paul, in terms of how an investor behave through all this? Is it just kind of close your eyes and sit tight, or are you looking for parts of the market that have gotten dislocated and are worth getting into or out of?
Yeah, we definitely don't think that this is the end, and the 2 weeks is just another postponement. We feel much better about buying this overall market if we saw stocks, below 6,500, the S&P below 6,500 again. That's where we think it would be closer to a bottom than it is right now, with sort of opium still running through the veins of the market. So yeah, we would not be big buyers. We're not going to back up the truck here, but for a long-term investor, it's really a good opportunity to rebalance a little bit and look for those markets where we think there's not much more upside, trim there, and put that money into markets where we don't think there's much more downside. And I can give you a couple of examples.
We will get those examples in just a moment, but for right now, we want to show you Ptarmigan Media ringing the closing bell at SIBO in Chicago. That ends the regular trading day for options. Paul, we'll get to you in a second. Adam, I guess it's interesting to have this push pull because I think it crystallizes things. Paul suggesting there's still hopium in the market. You're thinking that people are still a little bit downbeat and there would be upside surprise to resolution. I wonder if we're just talking about, within a band, right? We have been in this range from we hit a low of 6,300 in the S&P. The all-time highs were in late January were 7,000. How far does a relief rally carry us, Adam, if we do get one?
I don't think it would be too significant. Remember, we were struggling with 6,900, 7,000 before Iran started. So that's going to be even stronger resistance. Even if there is this 2-week ceasefire that gets agreed to. So a couple hundred points on the S&P. It's not massive on a percent basis. So definitely kind of short term, just relief rally. And then I think we're going to have to deal with the fallout. We're going to see this showing up in the economic data for months to come. Companies are going to be acknowledging it on their upcoming earnings reports. So, there's definitely going to be, at least a pretty substantial impact for a quarter or two, even if everything were to resolve itself in the coming weeks.
Yeah, I suppose it's a big adjustment relative to what the consensus was expecting in the first part of this year coming in, right? Where Atlanta Fed for first quarter GDP is like under 1.5%. We're probably not getting Fed rate cuts, at least unless something changes a lot. So, Paul, you mentioned some areas you think it's worth kind of adding to or subtracting from. What might those be?
Yeah, so let's start with one of the bigger ones. We think crude oil is way overshot. It's up 33% on the year, but in information technology down 7%. That's a net 40% differential. If you look at tech, it's got a valuation right now, a price divided by 12-month ahead earnings that's roughly the same as the composite market, and at the same time, tech's expected earnings running closer to 35% for calendar 26 versus 18% for the overall market. So you got one market that's oil, it's really overpriced, another market that looks really attractive and cheap to us. Earlier this week, we made the move in guidance to say, so let's trim long-term investors, let's trim from oil and our energy stocks, excuse me, and put that into information technology.
All right. Yeah, we'll see how that goes. I have to say, I hear you on tech looking inexpensive relative to the market, but we just came out of a couple of years with everybody saying, yeah, tech trades at a big premium, but that's because the market knows the earnings are going to be so great. So we'll see, where the disconnect might be as we get those earnings flowing through. Guys, we'll have to leave it there. Thanks for the time today. Adam, Christopher, Paul, Christopher. Appreciate it. WTI pulling back from its highs in the day, but still about $112 a barrel, getting closer to the highs it touched after the outbreak of the Iran war. President Trump trying everything to get the Strait of Hormuz to reopen. Our next guest, though, says if his efforts fail and the strait remains closed, the oil market could see severe consequences. You're watching Closing Bell Overtime live from the NASDAQ market.
Nuveen invests with the foresight and vision that comes from navigating more than 125 years of market cycles, unlocking the potential of public and private markets, spanning real estate to private credit and infrastructure to natural capital. Finding opportunity today to shape how portfolios are built for tomorrow. Nuveen, invest like the future is watching.
When I started Walton Goggins goggle glasses, I didn't know how to turn all this fancy prettiness into a classy looking logo. But GoDaddy Aero does with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
This is Mia. She's got big plans for her business to make a splash. And she needs the right partner to make it happen. U.S. Bank Business Banking gives her everything to run and grow her business her way. That's the power of Mia. And this is the power of us.
I don't remember how it started.
What's it that?
Our back and forth. It always came back. You probably don't remember what you told me.
That was perfect.
I heard every word.
Telling the girls about my Alzheimer's diagnosis was really hard. Early detection gave us time to adapt together.
If you or your family are noticing changes, it could be Alzheimer's. Talk about seeing a doctor together.
I taught for 20 years, but I started forgetting my lectures. Eventually, he had to quit. The early Alzheimer's diagnosis allowed us to take control of the situation.
If you or your family are noticing changes, it could be Alzheimer's. Talk about seeing a doctor together.
Shares of Casey's General Stores falling today, despite the stock being added to the S&P 500. Now, typically, stocks will get a boost on the news because index fund managers will have to buy the stock in order to match the index, although Casey's did have a very good run leading into today, year to date. Allen Pharmaceuticals and Marvell Technology, they were lower today as those stocks were viewed as potential additions to the S&P, but got passed over. The opening in the index was created when Hologic was acquired by private equity. And oil now down from its highs earlier today, hitting $117 on WTI, up nearly 70% since the war in Iran started. Prices soaring on President Trump's stated 8 p.m. deadline for an Iran deal before further attacks might be launched. Of course, we had word of a potential ceasefire since then. So where does oil go from here? Our next guest says U.S. natural gas hasn't kept pace with the global gas rally because of robust domestic supply. A separate issue, an incremental export capacity is also limited. He's lowering his 2026 U.S. price view on a return to surplus. Now, with me now is Francisco Blanch, head of commodities and derivatives at Bank of America. Francisco, it's great to have you. Just love initially your reaction to this report. We maybe get a 2-week break. Let's see if oil flows out of the strait. Does that adjust your view of what's priced into oil and where it could go?
Hey, Mike, thanks for having me. So it doesn't really change our view that much. We've been saying, and we moved our forecasts on Wednesday last week. We said, if the war
Like and subscribe, like and subscribe, like and subscribe. Santorio Hector, Stock Market Savage. What's up, Adam? What's good? Trying to make some money out the market some type of way, one way or another. That's all, bro. That's all I'm doing, trying to make some money out the market one way or another.
year, we have to reshuffle global flows quite a bit. There's a lot of oil stuck in different parts of the world where it doesn't need to be. And of course, as you know, we still have potentially a lot of physical infrastructure that may have.
I'm not understanding why is the pound up against the US dollar.
So I think we'll probably be in a $90 environment for most of the year and into. I think
It was another currency that's up against the US dollar that I would think would be down.
Projected date where it really was going to be causing more lasting disruption. I mean, I know that you've cited this where it's going to be rationing throughout parts of the world and things like that. Is there a sense in which waiting another 2 weeks could be counterproductive?
Well, to the extent that this 2 weeks allow for more vessels to get to the strait, and we've seen already maybe a little more flow. We saw this morning Iraq potentially getting a pass on flows. Remember, Iraq has been until now one of the biggest losers with 3 million barrels a day of exports offline. That's a lot of money for the Iraqi government and the Iraqi people that needs to be recouped. So that seems to be moving forward. And I think, look, it's anything that gets more vessels moving will help temper the price appreciation. But I don't really want to sugarcoat it too much because today dated Brent traded at record levels. So even if you see the future market down a little bit today, the Brent market's down a bit, and WTI was kind of up and down.
The reality is the physical market is extremely tight. And again, we've broken records in commodities like jet fuel, which are trading at double the rate of Brent, so $280 a barrel, as well as commodities like bunker fuel, which are used for shipping. So we still have a very tight physical market in the very front. The back's a little more relaxed, thinking there's going to be a resolution. Right. We did allude to your take on natural gas, and what's the takeaway from?
So I'm with my same three stocks: Netflix, Robinhood, and Lyft, as well as there's some other stocks that I haven't mentioned them to the public, or I haven't mentioned them per se on my channel because they could be kind of risky, and I'm a high risk investor. But so I may talk about them, but ultimately, we're in the same situation with so much volatility and uncertainty. I'm glad that I have my music to focus on to maximize how we generate income off of this music and these publishing deals. That's what my main focus is right now, to generate as much income as I can generate off of this music. I'm getting ready to get these songs registered and get them into my databases. It's a lot of work. Like I said before, please tap into the albums and the records produced by Santorio Hector on all music platforms. You know what I mean? Y'all gotta excuse me. I'm looking just as rough as the stock market. CET. I'm looking just as rough as the market right now. You dig? It'll be all right. I'm looking just as rough as the market. Shout out Mike Santoli, CNBC.
Chips gaining today. The SMH ETF was boosted by common story. Being insulated now from the geopolitical broader markets. Staying nice. Exactly the break. Over time. Be right back.
In my opinion, if you really want to know, in my opinion, oh my goodness, it's like I'm just trying to figure out any way that I can get money to invest into the market. That's where I'm at with it. I'm just trying to find out I'm just trying to find different sources of income that I could tap into. But I mean, to put into the market seriously. My favorite three: Robinhood, Netflix, and Lyft. Santorio Hector. Download the albums on all music platforms.
Ready to go.